Okay, so I think that's recording. Um, so some of you have been before, I recognize the names, and for some of you, this will be your first time coming into a meeting like this. And what I would say is I run them every week. They are every Wednesday at 9:30 now. Used to be midday, but we've changed them recently. And I talk about different subjects, all to do with the divorce process. And if you have a subject that you would specifically like to hear about, let me know. If I haven't covered it already, I'm happy to add a couple of extra sessions on that. The session runs for about 45 minutes. I talk for a bit of the session and then I take your questions. If you've got questions, put them in the chat box and I will definitely come to them at the end, depending on time. So we try and finish within around the 45-minute to 50-minute mark, just so you're aware. The session is recorded, and what I do is before I take your questions, I'll take it off live recording, and I can then answer your questions privately. Feel free to interact with me, drop me messages in the chat box privately. If you don't want to share publicly, that's fine. So any questions you've got, put them in the chat box and we'll go from there. So some of you have been dropping me messages privately about where you're up to. So I can see one of you is saying that you're about to start the process and you're looking just to get as much knowledge as possible. And that is brilliant. That is what we are here for. And these sessions are all about you getting knowledge, becoming empowered, understanding your situation as much as possible. And then I've got a message saying the divorce application has been sent in and now you're looking at financial matters. So thank you for sharing. I'm going to share my screen now and we will just get started. And hopefully you can see that okay. Let me know in the chat box if that is coming up fine for you and you can hear me all right as well. So before I start on the subject today, which is how to deal with a business on divorce, I'm going to tell you a little bit about who I am. Some of you are new here and it may have been the first time you've come on one of these sessions. My name is Bhavna. I am a former divorce lawyer. I'm a mediator and now I help people in a very different way. I'm also a single mom of 3 girls. I found myself going through the same things as you 13 years ago when I realized my marriage was coming to an end. And you never get into your marriage thinking this will happen to you. So it's a shock, regardless of who made the decision, how you got to that point, just realizing that this is about to happen, you're going to have to face this, is very hard to deal with. And some of you will understand this. I had legal knowledge, so I knew that legally I understood what to do. But I don't think anyone prepares you for the emotional situation you will be in. It is a complete roller coaster. And it did make me realize that there's so many people that don't have knowledge that are going through a divorce. Maybe you can't afford a lawyer to do everything for you. Maybe you don't want a lawyer to do everything for you because you want to keep control of the process yourself. What do those people do? And so it was a very interesting thing for me going through it myself. Heartbreaking and difficult and challenging as well, but also really started to understand my clients a little bit deeper than I would have done if I hadn't been through it. My children were really young at the time. My youngest was 1 year old, and the 2 others were, I think, a long time ago now, but 4 and 7. So it was quite a difficult time having young children. I wasn't working. I'd taken a short break from practicing as a lawyer just because the children were quite young. And so many things came up for me. There was so much fear. I was scared of how I would make ends meet. I was scared of how do you manage 3 young children with a full-time job, running a house, looking after yourself. and everything else that came with it. And I really wanted things to be amicable, and I kept holding on to this, that I wanted it to be amicable. I wanted my children to grow up knowing their dad, me having a good relationship with their dad, and imagining that if this had to happen, that it had to happen in the nicest way possible. And of course, that wasn't necessarily in my hands. It was something that I could put out there, but we had to work on together. Finances was a big fear for me, but being alone, just my mental health was in a very bad place. And as I said, some of you do resonate with this because it could be your experience as well. And luckily for me, I moved through the process. It doesn't mean that it was easy. It doesn't mean that there weren't difficult times. It was quite tricky. But we move through, you get through to the other side, and you're then able to start looking at life, start to heal, and planning for your next phase. And part of that planning for me is setting up my own business, because I realized that I could bring something very different to divorce. And that is what I've done. And I'll talk a little bit about how I work at the end. But that's a bit about my story. I still work with people going through divorce, and my own experience has just meant that I understand my clients a lot better, and I'm able to make sure I bring the expertise, personal experience to a service that is really needed. So moving on to the subject for today, how to deal with a business on divorce. And it's a really interesting subject because there's so many things to consider. And I hear so many things from people when there is a business that is involved in a divorce. Lots of people will miss the business out. They don't think that it should be included, or they don't realize it should be included. But when you do have a business, say either you have it, your ex-husband or wife has it, or it's, you both might be involved in the business. It makes it very tricky because it can form part of the marital assets. It can definitely have a value. And so therefore it needs to be included. We need to think about this business that you have. It may be that you've never been involved in the business, and therefore you think, I shouldn't really have anything to, as part of the settlement. And that might be the case. You may never have been involved in this business, but actually it still needs to be included in the assets. It may have a value. It may have net profit. It may also give an income. And so therefore it needs to be included. It may stay with the other person, but you should get something else as well. So we need to consider different things when we're looking at a business. It's not like a property, which we can go to an estate agent and get valued. We can work out the loan, the debt that's involved in the property. You can very quickly work out the expenses in selling it. So it is a little bit easier to deal with. But a business is part of the assets, and we need to consider it like that. So assets can be properties, investment properties, your family home, savings, other investments like shares, Bitcoin. You might have money in ISAs. Anything like that would be an asset, including pensions. They're assets as well. And so business interests can also be included in this. Saying that if you owned the company before you got married, you may argue that it should not be considered as a marital asset, it should be left out of calculations. But we need to look at that. It's a grey area, and each case is different. So we would need to look at the circumstances. If the company has generated income which you've used towards your family home, towards your family expenses to maintain the family standard of living, then it's likely to be taken into account as a financial resource and as an asset during the divorce. And let me know if you've got specific questions around your business in the chat box. It can be a direct message if you don't want to share the the message to everyone. So there's different types of businesses, and I think that's really important to know. And it helps us give a value to the business as well. The legal structure is really important. It tells us what you can do with the business as part of a divorce as well. So first thing is a sole trader. What is a sole trader? A sole trader is a self-employed person who owns and runs their own business as an individual. They've got sole ownership, they've got sole control, and the sole trader may own the business themselves, but they can still have employees. So a sole trader doesn't necessarily have to be somebody who works on their own. They can be a sole trader and still have people that work for them. And those people may be self-employed as well. As a sole trader, you and your business are considered one and the same. You're not a separate legal entity. You are part of the business. That means that you are responsible for all the transactions and activities that your company is involved with. Sole traders pay income tax on the business profit. So all the money that they make is profit, and they pay income tax on it. You might need to register for VAT if you go above the turnover threshold. And you're likely to file annual self-assessment tax returns to HMRC. So somebody that could be a sole trader, for example, a gardener. They may have a gardening company. They may employ self-employed people to come and help them with running the business, to doing the gardens, even admin invoicing. But they haven't set themselves up as a separate legal entity. So their business is a sole trader, and all the money that comes in after expenses is taxed and is kept by the person who owns the business. So the next type of company is a partnership, and this is where two or more partners carry out the business with a view to making a profit. You and your partners are responsible for running the business, and you share the profits between yourselves. You and your partners are personally responsible for paying the bills, and you, as I said, you share their business profits, and each partner pays income tax on their earnings and their share of the profit. So you could get PAYE, you could be on a wage or a salary, and you pay tax on that, but you could also get a share of the profits, which you would pay tax on as well. A limited company is slightly different in that it's a type of business structure that has been incorporated at Companies House as a legal person. So this company is a separate legal entity in itself. It's completely separate from the owners. It can enter into contracts in its own name, and it is responsible for its own actions, including its own finances and liabilities. So this is a business that is its own legal entity, separate from the owners. You can have directors that are not owners. You could have more shareholders. You can always issue shares. So it's a very different structure. There's lots of administrative tasks under a limited company that's required by law. And information and the accounts for the limited company are held on public register, which is available for anyone to see. So a limited company can have one person as the sole shareholder and the sole director, but it still makes it a distinct legal entity separate from that person. So this is how it's different from a sole trader. Sole trader isn't registered with any, say, Companies House. Obviously, you would be registered with HMRC for paying tax, but a limited company with a sole shareholder, so that's the sole owner, and one director is still distinct. So you need to see that as a different type of entity. And then finally, we have a public limited company. These companies are recognizable because they have the abbreviation PLC after their name. And it's a company that's offered its stock to the general public and can be listed on the stock exchange. They're quite complicated legal structures, so I'm not going to go through them today because We don't have a lot of time, and there may not be so many of you dealing with a PLC in your divorce. And why do we need to know any of this so far? It's because we need to value the business as part of the divorce process. So we've looked at the legal entity. We've now got to consider what monetary value do we put on this business. And it's really important to get a fair and accurate valuation of the business to ensure that your divorce financial settlement reflects a reality of your situation. There is no point going too high on the business valuation because that wouldn't be fair. But equally, you can't go too low as well. Often people are tempted to show a lower value for their business, even though it's worth much more. But if you inaccurately report the value of a business lower than it is, and then later the other person realizes that it should have been higher, this could open up your financial settlement again. So how do we do this? How do we get this value? And you can speak to your accountant, the business accountant, and they are able to value the business. And they can consider different things when they're valuing the business. The first thing is the assets that the business is holding. Is there any tools, any equipment, vehicles, premises that the business has? Does the business have a lot of stock that also has a value? It may be that the business is owed £100,000, and as that comes in, that's an asset as well. We look at cash flow. We look at cash flow that has happened in the past and forecast the cash flow to around 5 years in the future to get an idea of the business value. For some businesses, there is no asset. There's no vehicles, no premises, no stock. For example, a coaching business. And you may not be able to produce a cash flow forecast because it may be a new business. Then the accountant would need to analyze other businesses in that sort of area, in that industry, or even base a valuation on what's in the bank for that business. So, for example, you've got a plumbing business that you've set up. You've set it up as a sole trader. The owner of the business is a plumber, and they may have some other staff as well to help them. The business could be valued depending on the assets. So there may be a van, there may be some equipment that's needed, and tools as well. There may be some, say, laptops, printers, other assets like that, even though they don't generally have a great secondhand value. So we may be looking at the money that the business takes and the profit that the business is making and cash in the bank to get that valuation. As a sole trader, it's really difficult to sell that business possibly. It's not a separate legal entity from you, and that can reduce the valuation. And there's certain businesses that, for example, a consultancy business where you've got an IT contractor that set up a business. If they leave the company, if you were to sell that company, it wouldn't have much of a value because that person is the company. They actually are the only person that can deliver the services that that company has. So it's not an easy company to sell. You might value it with the money that's in the bank and money that's owed to the business. It depends on the type of business it is. So think about what income is coming in as well into the business bank account, because that can give you an idea of how much profit the business is making, or also what the value could be based on the profit coming in and the money in the bank. So there's different ways of valuing. If you have a business that is a limited company, say, for example, that you've got a business that sells products and you've got one shareholder, one director, how would you value that? So the accountant would look at the business as a whole, would consider if that business was going to be sold, what would somebody pay for it? And you might be worried because actually you've had nothing to do with this business. So how do you know accurately what that valuation is? the accountant can give a valuation, but you might be worried that that accountant is only valuing something quite low because it's in their client's interest to have that business valued low. You could question whether you feel they're being independent, being neutral. And you might want to get an independent valuation done because this would be somebody who's never been involved in the business, who's instructed by you and your ex-husband or wife to just come along and value that business. Because sometimes people aren't honest about the valuation. Sometimes people will hide what the actual valuation is. They may not cooperate with you around the valuation. And if that's the case, you may need to get independent valuation undertaken to get a proper idea of what that business is worth. The other person would need to agree to this because they would need to supply the information to the valuer to be able to value the business. And often when you're going through a divorce, you are trying to get things resolved yourselves, amicably, possibly. So initially, everything is voluntary. You are going through this process of financial disclosure right at the beginning, which is being transparent about your assets and liabilities, the other person being transparent about their assets and liabilities. So you may be going through this process of disclosure and you are voluntarily providing the information. And it is hoped that most people can resolve things voluntarily like that in that process of working together. If you can't do it together, you may use other means. You might use a mediator, you might use family and friends to help you, you may have solicitors negotiating on your behalf, or you might be able to do it yourself. So you get all the valuations of your assets and liabilities, and then you're negotiating what happens to these so that the two of you together or with other people helping you can reach an agreement. But if that isn't possible for you, you've tried everything, you can't get to this agreement with the other person, either because they're valuing really low, they're hiding assets, they just won't come to a reasonable agreement with you, then it may be that you have to go to court. And if you go to court and you've got a business and you can't agree the valuation of that business, it's likely a court will say an independent valuer needs to be instructed. So sometimes when you are dealing with this yourself, if you just can't reach an agreement, it's better to get an independent valuer instructed so they can then tell you what the valuation is, which can help you negotiate what happens to the business. So now we move on to how do you deal with the business? You've got the valuation, and say, for example, you've even agreed the valuation of the business. What happens next? And of course, we can't just look at the business in isolation. And I say this all the time, that a financial settlement is based on everything that is in the pot. We can't just base it on one thing. And it may be that if you've had no involvement in the business, you actually don't want it. You're happy for the other person to keep it, but we need to make sure that the whole settlement is fair so that we're thinking about what do you get, what is the other person getting, and if they're keeping the business, which has a valuation and is worth something, plus it gives them good income, you need to have a settlement that is fair for you as well. So there's different ways you can deal with the business. The first thing is offsetting, and that is where one person keeps the business and you get something else instead. So if you've got other assets and it may be an equivalent or greater value to the business, you could agree that the other person keeps the business and you keep other assets, or vice versa. So that's offsetting, and often people will do this with a business because if you've not been involved in the business, if, say, for example, you're not a plumber, you've never dealt with the plumbing business, you might say, I don't really want anything to do with that. You keep the business, that's yours. I'll get something else. I'll keep the family home. I'll keep the investment properties, whatever it is. But we have to look at this as a fair settlement so that we need to consider both your situations, plus the situation of any children, and children are always priority, to work out what is fair. And I do a session on fair settlement. And so come along to that to work out what's taken into account when we're looking at what's fair. but we do need to look at both your needs and the children's needs when we are sharing assets. I mean, it seems like a simple thing to do. I'll keep this, you keep that, but sometimes it makes sense if the business has been run by one person. And do bear in mind that the business could grow, and we have to take into account in the valuation the future for that business. It could grow, it could produce more income. That valuation for that business could be so much higher. So bear that in mind. Some businesses are risky. So a tech startup may have a valuation, but so many of them fail that the person keeping the business may end up with something that fails, and they could end up in debt as well. So you've got to bear in mind that businesses can go up in value, they could go down in value, they could close, go out of business. So all this is taken into account when we're looking at the valuation and potential for that business. There is also the option, if you both own the business together, say, for example, you both are directors, you are both equal shareholders, and you are actually both actively involved in running the business, you might decide that actually you don't want to run the business together anymore once you're divorced. So you could be in a position where you're like, one of us has to keep the business and one needs to step away. So that's the most popular way of dealing with a business that you're both running, that possibly you're both shareholders of. And you may not be running it together, you may just own it together. And one person may decide, I'll step away, I'll give you my share in that business and I will get something else. So you need to think about how that could work. The person that is taking your share could give you a lump sum instead of the business. So if the business is worth 200,000 and you're equal shareholders, that person who wants to keep the business may get a business loan and pay you £100,000. So you get a lump sum instead of the business. But also, I will always say, you've got to look at this amongst the whole settlement, not just the business, because there'll be other assets that you'll be splitting, sharing, and negotiating on, and this would be part of that. And the person that gets the lump sum would then resign as director as well. So as an example, if we've got a couple, Anna and Bob, they jointly own and manage a restaurant. And they've got a valuation for the restaurant, and they've agreed that it's the fair market valuation for the restaurant as well. So they've got it valued. They agree the valuation. They've agreed it at £1 million. That's the value of that restaurant if it was sold. Anna wants to continue to own and run the restaurant, and Bob says, well, I'm not that bothered because actually I want to move to a different city and I could do with opening my own restaurant there. So in order for Bob to get half of the value of the business as part of the divorce, Anna could purchase Bob's interest for an agreed amount. That way Bob has the money to start his restaurant. Another option is if your business produces good income but has little in the way of capital value, you could agree to pay your former partner ongoing maintenance rather than giving them a lump sum. Or it could be a lump sum payable in installments. So you may say, yes, I owe you £100,000 and I'll pay you every month from the business in installments to pay that share out. So there's different ways that you could do a buyout. The other thing is remain as co-owners. I did a poll on LinkedIn on Monday, and actually there were so many people saying that they would remain as co-owners, which I was a bit surprised at. I personally think this is quite tricky to manage. There could be boundaries that are crossed. There could be quite a few arguments, and you are having to see each other regularly as well. But some couples do find that continuing to run their family business together after separation works absolutely fine. You do need to think about the practical aspects of this. What rules do you need to put in place? How do you make decisions? How are you going to deal with staff? How will you deal with finances? And even things like growth, potential future plans. You're both going to have to agree them. So you need to have a really good relationship if that is something that you're going to go ahead and do. You need to have a formal written agreement about how you are going to run that business, because things could get really tricky, but that could be something you decide to do. And in the future, you could decide to sell the business. The proceeds of sale could then be shared in the agreed percentages. So if you both own the business 50-50, when you sold, say, in 5 years' time, you could then share the proceeds. But I would want a formal written agreement if you are going to keep this business together and run it together. Think about the, with a business, there is always tax that you need to consider as well. So you need to speak to an independent financial advisor, depending on what you are doing with this business, to make sure you understand the tax implications. And you could obviously sell the business, and selling the business will come with tax implications as well. But then once you have sold the business, that money could go into the pot to be shared between you. It doesn't have to be an equal share, but it needs to be decided as part of the whole settlement what would happen with that money as well. So these are the common ways to deal with a business, but not the only ways. There's lots of ways to deal with this. To work out what to do, you need to take into account so many different factors. There's lots of different things you need to think about with a business. And especially the valuation, that needs to be accurate and fair. You need to really look at the pros and cons of these different options that are available by getting legal advice and possibly financial advice as well. And really, if you are the owner of the business, speak to your accountant to work out the best way of doing this. And ultimately, the business is only one part of the picture of the finances. And we need to look at the whole settlement to get an idea of what you both need and what the children need to get to that all-important, fair and reasonable financial settlement. So that's what I wanted to share about businesses. And I can see that there are some questions coming in. Some are private and some are in the chat, and I will come to those shortly. Before I do that, I wanted to explain to you how you could work with me. And I get lots of people contacting me to find out. So I thought I'd share a little bit about how it works. I have a fixed fee program. The program is for 6 months. And during this 6 months, you get my support and guidance. You are doing your divorce yourself, but I am there guiding and supporting you through. I provide you with resources. So if you need to get a template of a document, if you are filling in documents, I will have a recording on how to do it. You can also come and ask me questions so that I am there to make sure that you are looked after and you know what to do. I can go through correspondence and help you draft correspondence. I look at documents and help you draft documents as well, including the divorce application. So I show you how to do that, and I can support you and check the work as well. We look at financial disclosure, how to get it, how to get the information from the other person about their finances. What do you need to see? How does it need to happen? I also look at your financial proposals. What could be a good proposal for you? Is there 5 options available? Which one is best? Which one can we actually make happen? Because there is no point in having a proposal that you can't make happen. So I do that work with you to make sure that it is possible and it is a good option for you. It is a group program, so there are other people in the group that would be on live calls as well with you. But actually, it brings a tribe and a supportive community to you, which is really important. Because actually everyone supporting each other is really powerful. And knowing that you are getting divorced alongside other people who are also in the same boat can be invaluable as well. I also bring in other experts to support you too, depending on what the need is. You don't necessarily need a solicitor. You can do your divorce yourself. So I can guide and support you. You can take the steps yourself. But sometimes people would like to have a solicitor to write letters on their behalf. and that's absolutely fine. I can recommend solicitors to you, and I can guide you on how to write your own letters to the other person as well. So let me know if you've got any questions about the program. I get lots and lots of testimonials, feedback, just comments about the work that goes on in that group, and it's always been absolutely amazing. So I'm really pleased I'm able to work in this way. If you do want to know more about the program, then reach out to me. It may be something that would be absolutely perfect for you, and I can certainly have a chat, explain to you how the program works, and really have a look at where you are going and how we can get you there. So really important to work on where you are going, what your priorities are, which is something we do. So do reach out. We can have a chat. We can see if this is right for you. I also have a book which is called The Divorce Planner, and it is actually a workbook for you to input information. I ask you to actually do the work, and I explain to you how to do the work to get as much information as possible around your finances and reach agreements around your children as well. So this is not just a book to read, it actually has spaces for you to write so that we are moving you forward, which is what I'm absolutely about. And you also get downloadable resources if you don't like writing in a book. So feel free to go onto Amazon and purchase that as well. And these are the links that you can reach out to me. Feel free to contact me on those places. I'm on Facebook, Instagram, got my website, YouTube as well. So feel free to drop me a message and I will come back to you. And I'm just putting a link to these different places where you can get in contact. So you have the option of reaching out to me. And I'm going to stop sharing now and have a look at some of your questions. So hopefully that was helpful. It'd be great for just to hear back from you to see what you thought of that today. And it is an interesting one because not everyone has a business to start with. So as part of a divorce settlement, some of you will come across a business because your ex-partner has a business, you've got a business, and they need to all be taken into account. So I've got a direct message. Thank you for these sessions. Can I please request the expense sheet, which was talked about last time? So that was sent out actually on Saturday, I believe. My assistant Nelma is on the call. Nelma, are you able to upload it to the chat box? Is that possible? And so maybe the person that direct messaged me can download it. It was sent out on Saturday, I believe. Okay, so I've got a direct message. I'm a coach and I have a limited company which only has one asset, a car. The value may be 30K. However, there would be costs associated to sell. I'd have to buy a new car. If I sell the business, I lose my income from that business. How would a judge deal with this in the division of the total assets? I'm the weaker party and currently on universal credit. The other person has a secure and well-paid job. Okay. So does the business have anything else? Is there money in the bank potentially? Is there any big